If you're using Elliott Wave to trade but still feel like the markets are random, chaotic, or just don't make sense, then stop everything, because what I'm about to show you might just rewrite how you see the universe and how you trade. I'm Peter Goodburn, founder of WaveTrack International, and for over 40 years, I've helped traders decode the financial markets using Elliott Wave. Not through guesswork, but through a precise method grounded in the universal laws of mathematics and proportion. If your Elliott Wave results have been inconsistent, or you've struggled to make it work reliably, there's a reason. It's not that Elliott Wave doesn't work, it's that most traders don't understand the hidden architecture behind it. Well, let me show you what I mean, and why nothing in the market or the universe is truly random. Well, Douglas Adams famously joked that the answer to life, the universe, and everything is 42. And while it made for brilliant storytelling, the real universe doesn't run on randomness. It runs on structure, on ratios, on proportion. Yes, sometimes it feels like chaos. Arthur Dent, the reluctant hero in Adams' series, learns to fly by throwing himself at the ground and missing. He drifts through absurdity, a universe of accidents, irony, and improbable events. But here's the paradox. The deeper you look into what seems chaotic, the more you find structure. Not imposed, not invented, but embedded like a fingerprint of nature, repeating itself across galaxies, rivers, human bodies, and financial markets. It's called fractality, the infinite recursion of pattern across scale. And it's why Elliott Wave, when applied correctly, isn't just technical analysis, it's cosmic alignment. Because at the core of it lies a universal truth. Nothing happens by chance. Let's take a closer look. From the spirals in seashells to the orbits of planets, the universe runs on mathematical constants. The golden ratio, approximately 1618, the Fibonacci sequence, the natural constant E, these aren't curiosities, they're architecture. In trading, these proportions aren't just aesthetic, they forecast price. When applied with precision, they don't just explain the market, they predict it. And when you realize that Elliott Wave is simply the market's language for expressing these patterns, everything changes. Because you stop guessing, you stop forcing your will onto the market, you begin to tune into its natural rhythm. Now let me show you something extraordinary and very real. In January 2004, we published an institutional forecast for the Dow Jones Industrial Average. We identified an ABC 335 expanding flat corrected pattern unfolding from the dot-com peak of 11,750. Well, Wave A's initial decline had already ended into the October 2002 low of 7197.5. And at the time of this forecast, the Dow was trading at 10,582. And Wave B was then projected as an advance to 14,169, followed by a crash to 6411 as Wave C to complete the pattern. Sounds specific? Almost too specific. Here's what happened. In October 2007, the market peaked at 14,198, and that was just 29 points off target. And in March 2008, when Wave C bottomed at 6470, that was just 58 points above our projected low. Well, these weren't just lucky guesses. These were mathematically derived forecasts, calculated using Fibonacci extensions and proportional symmetry. Well, we later ran the forecast through a statistical probability model. The odds of getting both pattern and price targets right by coincidence. And what did it say? It said that that was basically a probability of around 1 in 125 million. Yes, 1 in 125 million. Statistically, almost impossible. But that is the power of true Elliott Wave. Not subjective counts, but a disciplined universal framework for reading market behavior. Well, now ask yourself this. If nature expresses itself through pattern, why would the markets be any different? The reason so many traders fail with Elliott Wave is because they treat it like an art. What instead, you treated it like a science of proportion, a science of symmetry, of inevitable structure. Well, that shift changes everything. You stop doubting your analysis, you start knowing where you are in the pattern, you begin to anticipate rather than react. And trading moves from stress to strategy. That's exactly what you'll get in our Elliott Wave Compass Report. It's a bi-weekly publication that decodes the markets using the very same methods behind the Dow Jones forecast. And inside, you'll find full market coverage, stock indices, currencies, commodities, interest rates, and exact Fibonacci targets for price completion and reversals. It's pattern recognition logic with valid versus invalid count analysis. You'll see practical setups with risk-reward clarity and timing logic. But most importantly, you'll learn why behind every structure. Because once you understand the logic, the confidence comes naturally. You can get access to the Elliott Wave Compass Report for less than a single losing trade. 8 reports per month, decades of experience, priceless peace of mind. Click the link below this video, start decoding the markets the way it was meant to be understood, and if you're ready to stop flying by accident and start navigating by structure, this is your next step. I'm Peter Goodburn, and I look forward to showing you what the market is truly whispering to us.